everyone, Daniela Cambone here. Before we get to our interview today, just wanted to wish you a very great start to your 2025. May it be prosperous and above all else healthy. I also want to invite you to reach out to one of my incredible colleagues at ITM Trading. It's a perfect time for you to either reconnect with us or connect with us for your first time. Let us help you build a strategy centered around owning precious metals. Call us today or book your Calendly appointment. There's a link below in the description. Pick the day and time that works best for you. We'll talk soon. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show here on ITM Trading. Happy 2025. If you're just joining us, we have been putting together all these Outlook series, bringing back some of our all-time favorite guests and experts. And today, Mark Moss is my guest. He's you might know him as the host of the Mark Moss Show. He's also a partner of a leading Bitcoin venture capital fund called the Bitcoin Opportunity Fund. And he's the chief visionary officer. Did I get that right, Mark?
That's right.
Of Matador, a new public Bitcoin company. But he's come to us, a show primarily focused on gold, because we all have a common goal, and that is to educate folks about what truly money is. And Mark does a great job of that on his podcast. So Mark, nice to see you again.
Yeah, Danielle, great to see you as well. Happy to be back here. I will just say real quick about the gold comment. I became a gold bug in 2008. After the 2008 crash, I learned about fiat money and the need for sound money, and I became a gold bug. And I still am today. So to your point, we're kind of on the same side of that. And I speak every year. I'll be up at the Vancouver Resource Investor Conference, right, the gold crowd. So we're on the same team, and I definitely have deep roots in the gold space as well.
I love that. And I always tell that to people that, when I was a keynote speaker at the Bitcoin conference here in Montreal, and I say, we're all kind of fighting the common, we're all in the same boat, as you say, we're finding the common goal here. Yep. Before we talk, obviously, gold and Bitcoin and the global economy and things you're eyeing for 2025, interestingly, we were having a conversation offline, news just breaking that Prime Minister Trudeau has resigned in Canada. And you see this as a bigger pattern, right? You've been talking about this. Let's get your thoughts on his resignation here, since it's just breaking news.
Yeah, that's absolutely right. Something I started talking about in about 2020 and 2021 was I talk a lot about different cycles and 4-year cycles and 8-year and 20-year, 40-year, et cetera. But one was this big political revolution cycle and how the world swings between like this centralized model and then back to like a decentralized model. And it's just human nature. We take things too far, we overcorrect and go back the other way. And a lot of that was being driven by 3 cycles that I was talking about, or I do talk about converging, which was 1, this political revolution cycle, 2, a technological revolution cycle, because it's always technology that changes the world, and then finally this financial revolution cycle that we're seeing. And they're all 3 converging right now. They're different time periods. But the point is, when I started talking about this, how the world was swinging, had been swinging, the pendulum had been swinging to more of a centralized model, and it was going to be going back the other way to a decentralized model. Back in 2020, 2021, people thought that was crazy, because we were still on this path of the World Economic Forum and Klaus Schwab and the World Health Organization and all these things. And now we can see that it's been swinging back the other way. I really said that, like Trump being elected in 2016 and Brexit, those were signs of it starting to swing back. And to the point that you said about Trudeau, I think that really kind of puts a feather in the cap. Like this is the final signpost. I mean, maybe Macron stepping down in France would be another one, but for Trudeau to step down, I think is a major sign that the world is swinging back. And I feel the optimism in the air. I feel it. We can see it in the markets, and so I think it's a bullish future for us.
Yeah, and I would like to think that perhaps shows like ours had at least a little bit of impact and influence in educating folks and kind of waking them up to what was happening, right? Because we saw this rebellion against the World Economic Forum and company.
Yeah, 100%, Danielle. It's because it's always education. And so by getting this education out there and allowing people to start understanding things from different angles, it allows them to open up their mind. And obviously, of course, our shows, but bigger shows, even of course, like the Joe Rogans and et cetera. And this sort of this rise of this independent media, but really it's a rise of people's own interest into their own education. And yeah, I think it had a massive impact.
So let's talk about things you're eyeing for 2025. Obviously, I want to get what's on your radar. This is our Outlook show, but one of the recent podcasts you did really caught my attention because you were charting and watching a 300-year pattern, and you're applying this to what you see next coming for Bitcoin.
Yeah.
So where do you see it headed after the 100,000 milestone here?
Yeah, certainly. So part of these cycles we talk about, there's like this 50-year cycle that repeats. I call it a quantum wave cycle. If you're a technologist, you might know it as like a K-wave cycle. But about every 50 years, we have this new technological revolution that changes the course of humanity and also drives financial markets. So as investors, we should understand this. And it's happened now 5 times, and I believe it's now happening the 6th time. And if you're, some sort of a technical analyst, you understand the power of retesting cycles a 3rd time, a 4th time. Bitcoin halving has this cycle every 4 years. If it happens 2 times, it might happen a 3rd. If it happens 3, it probably happens a 4th. So this one's already happened 5 times. And I believe it's happening the 6th time now. And it's about a 50-year cycle that has 4 distinct phases. And this is how a technological revolution reaches adoption. And it's not just one technology, it's a cluster. And so we had the Industrial Revolution, we had steam engines, railways, we had electricity, steel, heavy equipment, we had oil fuels, automobiles. 1971 brought us the microprocessor, telecommunications, personal computers, the internet. And now we're witnessing what I'm calling the decentralized revolution. And this is new technologies like Bitcoin, blockchain. You have not just decentralized monetary protocols like Bitcoin, you have decentralized communication protocols like Nostr. And so this is really taken off. And I even say that AI is sort of that as well, even though some might argue that AI is sort of centralized because of the programming. We're seeing decentralized models, but really it allows single person, Sam Altman said maybe a single person billion-dollar company. And so really this piece of technology that's very decentralizing is overlapping with this cycle that's also decentralizing. And when we look at this, the way that you look at it from a technologist viewpoint is you look at a new technology and then how long it takes to reach adoption. Full adoption is typically considered about 80%. There's still people that don't use computers and the internet for some reason. So it's about 80%. And you can measure that with lots of different things. And one is this 50-year cycle. And you can overlay like an S curve on top of it. And the way an S curve works is the time it takes to go from 0 to 10% is the same time it takes to go from 10 to 90%. And so we're in that steep part of the S curve right now. Based off of this cycle that's again repeating for the 6th time, I predict that Bitcoin will have reached full adoption and I believe become the unit of account of the world, the global monetary unit of account around 2050.
2050.
Yeah.
Because I also read you predict Bitcoin's rise to 21 trillion market cap, right?
Yeah. So we can break that down.
By 2030. So that's in 5 years.
21 trillion?
Yeah.
Yeah. So that would be $1 million per Bitcoin in 5 years, which is about a 10x from here. And I believe that's sort of where I'm at. So I believe about $1 million by 2030, about 14 million by 2040, and then about 40 million by 2050.
So Mark, the question is going to be, what makes you so bullish on the adoption and the price target?
Yeah, I might argue that that's not actually bullish, and it's actually somewhat bearish or definitely conservative. And the reason why I would say that is if you look back, and so in this presentation I gave in Abu Dhabi a couple of weeks ago, we looked at what we call global store of value assets. So assets that we just park money into. So this would be real estate, bonds, real estate, equities, offshore money, bank accounts, collectibles, fine art, things like that. So places where you just park that. Now today that's about $900 trillion of store of value assets. But I charted from 2010 to 2020 just so you could see the growth. So what we have is we have this unlimited money printing by governments around the world, and the denominator, the US dollars going up, is pushing the asset values up. So for example, in 2010, real estate was about gold was about a $5 trillion asset. Today it's a 11, 12 trillion. And so we can see the rise of all these assets going up. And so you have to see the rise of them from 2010 to 2020 to see how crazy this looks. So then when we project the continued increase of global store of value assets from 2020 to 2030, 2030 to 2040, et cetera. And what we're looking at with Bitcoin as a venture capital investor, the way that we do this is if I was pitched on Uber, in Silicon Valley, 15 years ago, whatever it was, I would say, well, what is this company Uber going to be worth? Well, if they disrupt the taxi industry, the addressable market is this big, the limo industry is this big, the van share is this big. If I could get 5% from each of those, disrupt 5% from each, then, Uber could be 100 million or whatever. And so we look at Bitcoin as a store of value assets. In this 50-year cycle, eventually it will become a medium exchange. It's not today. It's a store of value asset. And so it's competing against other store of value assets, real estate, bonds, stocks, et cetera. And so how much of those do we think it can capture? 1%, 5%, et cetera. And so what we project out is that Bitcoin, I believe, is a better store of value asset than most of those. And so it will continue to steal market share. Getting to 21 trillion, if I remember the math right, I have the charts, I can share them with you, is like 1.25% of global store of value assets. Like 1.25%. And so I would argue that if it's only capturing 1% by 2030, that would be bearish. And here's why. Uber and Airbnb both were able to capture 10% of their respective markets in less than a decade. 10%. So to get to 1.25% is actually pretty bearish. By 2040, I project that it would get to 8% of the market share.
If all goes according to plan and smoothly, right? And you have no government interference.
Well, I think that question has been, I would argue or propose that argument has been put to bed. I mean, I've been now talking about Bitcoin for about 10 years, and I've heard that argument, the governments will make it illegal 1,000 times, 1,000,000 times. I think, Trump coming out, Trump being elected, Trump running on a pro-Bitcoin platform, the U.S. proposing the strategic reserve bill that's already been submitted by Senator Lummis. We have a Republican sweep of the government with Trump there. I believe there's a very high probability this goes through. I think that question of governments making it illegal is gone. I can't see anybody making that anymore.
This is an important point to make because a lot of people think that the U.S. dollar has to basically crash in order for Bitcoin to succeed. But you say that's not the case, right?
It's not the case at all, because right now Bitcoin is competing against store of value assets. And back to the government making it legal. Most people know, at least everybody watching your show, knows they shouldn't be storing their wealth in fiat currency, which is why they buy gold and real estate and bonds and stocks. And so Bitcoin, again, is competing against those. It's competing against, should I buy this old car, this Mona Lisa painting, or should I buy Bitcoin? It's competing against those. The government is not shutting down every store of value asset. They're not doing that. And so what Bitcoin is doing is taking from those asset categories. It's not taking from the dollar. And so a lot of people would say, well, when Bitcoin's $1 million, the dollar's worth nothing, right? But that's not the case at all. Sure, a gallon of gas goes from $4 to $6, but it doesn't mean the dollar's worthless. Now, the dollar's becoming worthless on its own because of what the government's doing to it. But it's certainly not the case that the dollar has to die or crash for it to continue to go up.
And I think that's a good lesson to repeat of why folks shouldn't be in fiat currencies, right? Talk to us a little bit about your journey. I mean, are you completely out of the so-called system, Mark?
No, not at all. I mean, I run multiple businesses. I mean, now I have this publicly traded company. So we're certainly in the system, if you would call it that. I mean, I earn in dollars, right? So I earn in dollars. I still own real estate that I have to pay in dollars. I have a lot of people that work for me. We pay them in dollars. So we're certainly not out of the system. But for me, I look at it as sort of my store of value, right? So on a quarterly basis, here's how much money we have left over in our business accounts. Here's what we think is sort of safe for us to kind of hold. And then we do big purchases on like a quarterly basis. Not as good as Michael Saylor doing them like on a monthly basis. But that's sort of how I run it personally. I'm not out of the system. But I do think about it differently from a frame of mind. And this was part of the presentation I gave in Abu Dhabi, which is what I believe on a Bitcoin standard is that instead of what we see today, everybody, maybe this election was sort of decided on this inflation narrative, rather than this everything getting more expensive and homes are being priced out of homes and gas and food, et cetera, being more expensive. To me, when I look at them priced in Bitcoin, they've all gotten cheaper. And so because I use that as my main store of value, the world's gotten cheaper. For example, in the United States in 2016, the median home was about $260,000. Today it's $460,000. However, priced in Bitcoin, it was about 600 Bitcoin in 2016. Today it's 4. So because I continue to put my savings into Bitcoin and use it as my store of value or my unit of account, for me, life gets cheaper, even though I'm earning in fiat currency, right? I'm trading it over.
So let me ask you this, Mark. If that's your projection for Bitcoin, how do you see, what do you said you started your journey as a gold bug. What do you see in store for gold? What's your forecast for gold?
Let's chart where I believe gold goes, because I believe all assets go up because, of course, governments don't stop printing money. As a matter of fact, the CBO, Congressional Budget Office, projects out where they expect deficit spending and debt to be for the next 30 years to 2054. So again, to recap it, gold was about 5 trillion in 2010. It ended 2020 at 11.5 trillion. So from 5 to 11.5. And I believe that continues. So from 2020, it was 11.5. I'm projecting at 2030 for it to be at about 20 trillion. That's a 5.7% ARR over the next over this decade through 2030. I would then say by 2040 that would have gone to 32.5 trillion, which is about 1% of the total global store of value assets. So I believe that it will slow down a little bit in that because of other assets maybe outcompeting it. Again, none of these assets go away; they continue to grow by 2040, and then by 2050, I put gold at $52.5 trillion.
Which would per ounce equate to about what, Mark?
I didn't do the math to break it down by ounce. The problem with gold that makes it a little bit difficult to do that on is because the supply of gold changes. I mean, we know that all the gold brought out of the ground is still in existence today. But what happens if gold spiked to $3,000 or $4,000 an ounce right now? All the miners would be out there digging more gold out of the ground, so we'd have a higher inflation rate. So I don't know what the total supply. I didn't project that into my math, but that's where I project the market cap to be, about 52.5 trillion.
I just had a filmmaker on who did a documentary on central bank digital currencies. And it's interesting to me. I feel like we were speaking so much about central bank digital currencies, and that's why it was important to own things outside of cash, like gold or, Bitcoin for some. Did you find that we've kind of stopped talking about central bank digital currencies purposely? Perhaps the government's took a step back from it. I mean, we saw the Bank of Canada said they were going to put it on the back burner. We saw the Bank of International Settlements saying they weren't going to participate in Enbridge anymore. Do you think there was a calculated effort to not create fear in the public?
Yeah, I think there's a couple things going on. So first of all, in countries that they've rolled it out, we've seen it be a complete utter disaster. So even in China, where you might argue might have the most control and force there, they couldn't really get it to take off. But in places like Nigeria, the eNaira got rolled out and it was complete disaster and wrecked their entire economy. So I think we've seen it have a really bad effect in some areas. Number two, certainly in the United States, there's been a massive amount of pushback. I mean, to the point where states have passed laws that it can't happen, right? In Canada, to your point, the Bank of Canada has also pulled back on that, but it was because of public outrage, I believe. So what they did is through all their polls, they saw like nobody wants it. They said, hey, let's just kind of put that on the back burner. So I think it's a combination of one, seeing that where it's been rolled out in places where they have a lot of control over, it's been a disaster. Number two, in places that still sort of have some democratic vote, they've seen that there's just no appetite for it. I think number three, though, I would also say that just because maybe we don't hear about it so much doesn't mean the digital money and the control over money is going away. And so, rolling out a CBDC makes it programmable money, which makes it a lot more dystopian. Of course, they have all the control over money right now, but it would give them even more. But it doesn't mean that they don't have that now. I think what we're also seeing in the United States, and this is very interesting, is the rise of the US dollar stable coins. And
Mm,
so we have these US dollar stablecoins where basically I give a dollar, they give me a token back that
right.
represents that dollar. Tether is the largest one, and they have billions of dollars. And the interesting thing about this is that where do those billions of dollars go? Well, right now they're going into US treasuries. So if you think about the US dollar as the reserve currency of the world, they have this thing where they need people to buy their treasuries. The US needs someone to buy their debt. They'd like to see the dollar kind of reach more adoption. People around the world, specifically in countries with super high inflation, Lebanon, Turkey, Argentina, Venezuela, et cetera, they're scrambling to try to get the dollars, but they can't get into them very easily unless they go to the black market. But now they can get into these US dollar stable coins. So we have this phenomenon where we have all the people, the citizens around the world that want to get into dollars and couldn't before, but now they can with stable coins, and the US government that wants someone to buy all their debt. And so now we're seeing the US dollar stablecoins sort of really reach huge adoption around the world. And all of that money is then going into US treasuries. And that's sort of a central bank digital currency.
Interesting. Interesting. Without it being out in the public per se.
Right. I mean, because what's the definition of a central bank digital currency? It's a digital currency. The central bank, issues it. That would sort of be the main thing. It's like instead of going through our banking system and structure, it would go directly to the central bank. But in this case, I guess they're buying treasuries. So it's the government issuing the money directly to the people through a digital currency. It's sort of the same thing. I mean, maybe the definition is a little bit different. Is
But
it?
would you be able to track, but you wouldn't be able to track people's spending?
Why not?
How would you track it in the system that you've
Yeah,
just
so a
outlined?
central bank digital currency is not a decentralized platform like Bitcoin. A stable coin is a centralized platform. So as far as tracking it, yeah, you probably aren't able to track it, but are you able to seize it, freeze it, roll
Okay.
transactions back, control it,
Yes.
things like that? You certainly are.
Yes. Yeah.
So obviously, if you're having to buy the stablecoin with some sort of KYC, then you can track it. Right. So if
Got
I
it.
had to put my ID in when I bought the stablecoin, then you know that address is owned by that. And then, of course, just like they do with Bitcoin, there's companies like Chainalysis that could then follow those transactions around the blockchain, and they use some AI to sort of try to figure out who those are. But of course, in third world countries, people are buying them without ID, so you don't really have that. But you do have the control aspect. So like I said, you could freeze it, you could stop it, you could roll the transaction back, you could seize it,
Mhm.
you could do all of those things. You could put restrictions into them as far as like, hey, you can't transfer that stable coin to this person because we know that he sells gas, or
Right.
you can't transfer this person because we know he sells cows, or things like that. So you do have a lot of control over it from that level.
Mark, let me ask you, this is our Outlook series. What are things that you're eyeing as red flags potentially as we enter this new year?
Yeah.
Critical
So
points that, yeah.
if you go back to my YouTube channel, you'll see around October of 2022, I made a video. And I said, there's no market crash coming, and here's why. And all through 2023, I was sort of the contrarian view of the market's not going to crash. And it's all been based off of looking at back to the CBO projecting the debt levels, the deficit levels, and really looking at global liquidity, right? And so looking at 2025, I see that starting to be a little bit turbulent, but I'm still eyeing lots of liquidity. I think that we're going to probably start the year off pretty slow, probably this first month or maybe even this first quarter of the year, because we have a new transition, a new administration, Trump administration coming to the United States right now. And what I saw from the last Fed meeting was it looked like the Fed sort of was maybe throwing Trump and the Trump administration under the bus a little bit. I made a video about it, kind of talking about that, where Powell seemed to have maybe taken a couple jabs, and he talked about how that, he said, we're uncertain of what this Trump tariffs could do to the market. He said that we see similar to the 2016 dynamic of when Trump coming in. And he said that many of the Fed board members were putting a lot of that into their calculation. And so it looks like the Fed is sort of throwing him under the bus, like, hey, he could wreck the market. We're being cautious. We're going to slow down on easing.
Yeah.
And I think that's sort of putting the market into this uneasiness. We saw, the dollar's getting stronger. We see Trump talking about these tariffs. Of course, today the news broke that
Yes.
Washington Post seemingly made some false allegations about Trump pulling back on the
Right,
tariffs.
right, right.
Um, and so, we have a lot of uncertainty right now that needs to be overcome. Of course, that affects China. China's currency is crashing. They need the U.S. to devalue their currency, but the dollar's been getting stronger. And so we don't know what this new administration is going to do. We don't know if Powell's correct. We don't know if Trump is smart enough to navigate this properly. My bet would be on the Trump administration to navigate this properly. He's got a really good team. I really like Scott Bessent coming in. Howard Lutnick is coming in. So I think he can navigate this properly. But there's a lot of uncertainty. So I would expect this quarter to probably be a little bit sketchy, if you will. And so from risk assets, specifically gold and Bitcoin, I would expect those to sort of maybe be a little bit volatile throughout the rest of the year. I mean, I think it's game on. I mean, I think we get this resolved. I'm super bullish on the Trump administration. I mean, everybody accuses him of being the instigator and taking us into World War III, but really he's been the greatest uniter we've ever seen in the world today. I mean, just look at the people he brought into his administration. So people from all over the world, and in his past administration, we saw peace. So I'm pretty bullish on that. I would expect that the rest of this year we see game back on, like I said, global liquidity going back up. I'm thinking that Bitcoin is up 50 to 75% by the end of the year. Not without lots of volatility.
Stocks? You said you weren't expecting. Right. And same for gold?
Yeah, no, I mean, stocks and gold. I'm really bullish on gold. I was looking at an article this morning, just showing how sort of the U.S. dollar share of store value assets has been continuing to decline, or trade, I should say, has been declining, and gold is continuing to climb. I'm super bullish on gold. I think that we'll see gold continue to climb as we continue to see countries continuing to recycle their surpluses into gold. I think there's like this outlier, and this is sort of why I still hold some gold and I love to keep an eye on it. There's this outlier where potentially China either moves first to revalue gold or forces the Fed's hand to maybe revalue some of the gold that's on the books. And we can see gold have like a really big jump. I don't know if that happens this year. I think I just see gold continuing to steady to climb. For the most part, I think this is a bullish year for sure. Probably not on par with where we were last year. Probably by the end of this year, going into next year is probably going to be, I'll be a little bit more bearish. Again, I really look at these liquidity cycles. And so, Michael Howell does a really good job talking about global liquidity. There's a couple other good liquidity cycles. I mean, Raoul Paul, Real Vision's got a really good one. My friends over at the Bitcoin Layer, Nick Bhatia, they have one. And they all show that this global liquidity is really moving on like these 4-year cycles. In 2008, when the great financial crash happened, the whole world dropped rates to zero. The whole world refinanced at the same time. And it synchronized all the global debt. And right now, about 75% of global debt is on about a 1 to 5 year maturity. So about most of it's in that 3 to 4 year range. And so that was 2008, 12, 16, 20, 24. And so I believe that continues as of now. And so probably by the end of this year, I'll be coming a little bit more bearish and into next year. But as of right now, I think this year is another great year for Bitcoin and other risk on assets.
Last question, last point, Mark. Like I said, we kind of tempered the talk of CBDCs recently. Are we going to see a return of bank runs in 2025?
I don't think so. And the reason why I would say that is that the banks cannot fail. Now, when I say the banks cannot fail, let's break this down into 2 parts. So bank runs being where people want to get their money out of the bank. And so I think about it 2 different ways. So in 2023, we saw, the big 3 banks in the US fail. The owners of the banks, the equity holders of the banks, they lost. The banks collapsed. The people that had the money in the bank didn't lose a dollar. So I would break this down. So for the average person, I don't see major risk for people having money in the bank. I believe the government is always going to make them whole. If they don't, then we would have a massive bank run and the entire system would collapse. So I just can't see any world where the government would, the Fed, the government, the Treasury, however, would allow the depositors to lose their money. Now, will we see banks collapse and will we see shareholders lose out? I think certainly we will. So I think that's one of the reasons why Warren Buffett has so much cash on the sidelines right now, right? He sold so much of Bank of America because he sees these banks are not going to be profitable. The banks are basically almost like a utility for the government being forced to buy treasuries, they're not going to be profitable. Some of them are going to lose. And so Warren Buffett saw that, sold a bunch of his bank stocks. So I think we could see banks collapse. We know there's a lot of ticking time bombs on their bonds they're holding, as well as their real estate bonds that they're holding. So we'll probably see some banks collapse. I don't expect any depositors to lose money, so I don't expect the bank run.
Mark Moss, I appreciate your thoughts and wish you a very, very healthy and prosperous 2025. Thank you for joining us today.
Thank you so much.
And thank you all for watching. We'll have more great content coming your way, so be sure to stay tuned to our Outlook series. Sign up at danielacamboni.com to stay on top of it all. And of course, to our YouTube channel. That's it for me. We'll see you soon.